and yeah, we'll go from there. So just been doing my my markup for the week. Can I just check you guys can all see my chart?
Yes, we see.
Yeah, perfect. Okay, so I've just been doing my markup for the week. I'm going to go back through and just talk through a couple of trades that we took earlier in the week and the reason why we took them. I'm going to try not to get rid of much of my analysis here, but I might have to hide a little bit of it. What I want to talk to you about today is the ISC, which is the institutional sweep candle, or the impulsive sweep candle, which is kind of just for my own psychology, the way I like to call it. This is a really key thing to make sure you're including in your trades. It will play a really important factor in making sure that your trades stay profitable, and it gives you a really good signal to make sure that you get into them at the right time, basically. As you probably know from any kind of liquidity or any kind of institutional trading strategy, you do get quite a lot of false moves, especially if you're using the lower time frames. What I might actually do very quickly is I might just jump over to my back testing chart, just because that way we can then delete everything we've got here, and I'll talk you through a couple of trades. Ahmad, how you doing, bud?
I'm good.
Welcome, man. Good to see you. Good to see you. Right, so let's just go through. Let's get rid of some of these. I'll get rid of some of this shit at the top. Not get rid of it. No, it just mutes me. Right, okay. So let's talk through a couple of trades from last week. Sorry, I've got all these windows open, guys. I'm just trying to make sure. Right, okay, fine. So this was this is the daily chart. As we can see, I'm going to mark on my normal levels. Let's go back a couple of days. Sorry, guys, I've got this annoying thing in the way. I'm just trying to get rid of it because it's hiding some of my. Anyone any good on Zoom? Did you get rid of the bar at the top? Can you do that? Is that possible?
Really good enough, really major, and I will just myself and the rest of the house.
Let's try and hide it. Right, hide video panel. No. Hide floating meat. There we go. Gone. Okay, cool. Right. Okay. So let's go back a couple of days into the charts. Let's go back and have a look at some of these from earlier in the week, and we'll almost do a bit of a back testing session. We'll talk through this trade firstly, which is quite a good trade. Did any of you catch the Euro USD move on Friday? It was Friday, wasn't it? There's a big move on Friday. Did anyone catch that? No?
Nope.
No. Okay, fine. Let's talk through this trade here. As you can see, it's a really nice trade. It's pretty, if you knock it down to its kind of basic form, it's a pretty simple trade, really. It's a classic kind of supply retest, and there will be ways to get into this that will be a lot more profitable, ways that you can catch a lot of the move, and this will be a good indication for me, a good opportunity for me to show you the ISC and how we use it. So let's just imagine that our chart is back here for the time being, okay? For me, when I'm looking at the charts, the first thing that I'll always do is I'll mark on my major levels and make sure that we are paying attention to those in case they get swept. So I'd always mark on the daily highs and lows, so we get that one in there. That's the daily low, the daily high there. Okay, these are our significant levels that if they are swept in some way, we're going to be looking for some kind of reversal from them. Let's mark on all of these levels for now. I'm going to play this chart forward and just wait and see what we get through the charts. So one thing to note on Euro USD that's happened recently is that we have swept this major level. So this was a major swing point. Now, major swing points have a lot of liquidity. If you think about this from a institutional, retail concept, doesn't really matter. This area here is very clearly a swing low on the higher time frames. So the amount of liquidity sat underneath that is pretty massive, which is why you see when price reaches these areas and tags them, we have reactions. Now, one thing that's really important to get your head around is, unlike the hourly time frame or the minute time frames, if you have an area which has been swept on, say, a 15-minute time frame, what you'll normally get is, let's imagine for a minute, this is a liquidity point on, say, the 15-minute chart. What you'll normally get is price kind of mucking around underneath it before then we get a push down, push up, probably then a false move, and then we get our actual move down to the bottom here. This all happens on the 15-minute chart very, very quickly. This might be the space of a few hours. This might be the space of just a day. And then once that's done, it's done. One of the things to get your head around on the higher time frames is that although this major level has been taken, that won't be all the liquidity that's sat above it, or sorry, sat below it. What you'll find is that when it's tagged, people will place trades to go bearish, people will place trades to go bullish, and so you'll have reactions almost like you would do on, say, the 1 minute time frame. But price will spend a lot of time around here kind of mucking about, bouncing off it, breaking it, bouncing off it, breaking it, because what we're looking at as day traders is we're looking at the lower time frames. And we wonder why we don't quite catch our bullish move from here. Well, that's ultimately because there's lots of liquidity sat underneath here. So it may not just be a tag of a major level like that. You know, look how old that major level is. You know, it's from back in on the 31st of May and the 1st of June. So these are areas that price may spend some time around, which is why when you take trades from here and then they immediately shoot off and then come back to stop you out, this is why they often will fail, because it's going to take a bit of time for those orders to be used up and a bit of time for, you know, the market to actually generate what it needs to move in the direction that it ultimately wants to go. So if we're coming into this day here, okay, for me, what I'm looking at is I'm drawing on my zone. This is my range now for this marketplace. I'm in discount pricing here and I'm below the equilibrium area here. Let's just mark that equilibrium area on. Okay, so for me, I'm not interested really in selling this marketplace until we get back above this area. The other thing that you want to be paying attention for as well is efficient pricing and inefficient pricing. And I spoke about this. If some of you have watched that latest video that I put down on YouTube, you'll notice that price will have a desire not just to fill in balance. The reason why it needs to become up here is because it needs to make this area efficient. We have to have efficient price action generally, okay, to fuel the bearish push down. Whilst the market is down here, we are not in a premium area where we want to be selling from. So for me, looking at this chart, all I'm considering on it right now is buys. And the reason for that is because we are A, in discount, and B, we are inefficient. We can't draw our efficiency line on yet because we haven't yet retested this supply area. A lot of people confuse supply. And a lot of the YouTube education teaches you, you know, and some of the more basic stuff, it's important to learn it at the start, but some of the more basic YouTube education teaches you that supply zones need to be the last candle up before the candle down. That is technically supply, but this entire move here is where the move down was generated from. And the last low before that move pushed down was, so that's the high there. So the last low was here. So it's really important to note that supplies are areas usually, and you know, you go up to maybe a daily time frame, you see that zone I've drawn on there, you can see it's just one candle. So that is technically on the daily, that is a supply zone. So it's important that we're not going to be trading specifically from that, but it's an important area that if price gets to it, we really want to pay attention to it. So let's drop down and let's see if we have any setups here. Okay, so we've come now into this is our Asian range here, that's our Frankfurt range here. Quite a nice sell from there, but you'll notice that when price on the higher time frame is in, you know, lower pricing, you see how that push down didn't really do anything? That's because ultimately the bulls are pushing the marketplace upwards. If this setup, this exact setup was up here, you'd have probably found this move would have come all the way down here, because the bears would have been in control. But right now the bulls are in control and they're fighting against all this resistance for the market to go down. And this major level being swept, that has fueled that resistance, and now we're pushing a lot higher, as you can see. So probably wouldn't be trading on this day, just literally like this. Only reason being is that this is our 1 o'clock area. Do you know what? Actually, we might have taken a trade there. Let's see if we got one set up. Yeah, okay, so pretty clean setup there. I'm going to mark it on for you so you can all see how I would have looked at it and what I would have traded. So we've got a trap here. Okay, this is our New York Open trap. I've done a couple of videos on this, and the first hour typically of New York will create an area of liquidity, an area of an area for price to be basically catching you out, and these New York Open traps will fool you often into thinking that the price is going to go one way before it's ultimately swept. And if you go back through the marketplace, you'll see that almost every single day on the market, the New York Open will create a trap where it tricks you into thinking that it's going to go bearish, and then it gets swept. Okay, let's just do the last couple of days. Okay, this one ultimately was news, so there's no trap there, but that in itself would be a news trap, and I'll be paying close attention to that if price came into it. We've got here another news one that we can see here. So this is another news move here. The news moves are slightly different to the New York Open traps. We still pay attention to them, and ultimately they will be swept, but news traps themselves, as you can see, was swept there. The spike, the initial spike from any news related trap, news related event will usually be swept over the next day or so, and you can see that swept there. Here we've got a tiny one here, as you can see. We've actually got two. I mean, it's not the best of charts, as you can see, but you can see that first one. Let's just take off the magnet quickly. That first one was swept. You could have even looked at the second one, because that was also swept as well. So we've got two traps there. So you can see what I'm getting at ultimately. That one actually held, but them holding you often find is a rarity. And you'll find the further you go back, every time you draw these on, pretty much they'll get swept. Okay, so it's really important to watch what, and you know, depends on how you would have drawn it that way. You know, you could argue that that might have been the initial false move there. But either way, they've both been swept, as you can see. So it's really important to pay attention to those, because they will regularly get swept out. Now, what did price do when we came into this New York area? So if I was looking at the market live, what I'll be paying attention to is this first hour and what happens in this first hour. So we've already got the understanding that because of where we've come from, okay, discount pricing and a major level, we're looking for bullish higher prices. This is counter trend, but for me, I'm happy to take a counter trend move, ultimately because we are pushing up to this efficient zone. And if I can get a 3 to 5 R out of this zone, then I'm, happy to take it all day long. Okay, so for me then, I'm marking on my liquidity, which is here. That daily level wouldn't have been there at that point, so we don't know that's a day level, of course. But for now, we're marking on that liquidity level. And this candle here, and you probably see it better on the 1 minute time frame. Okay, this candle here, actually it looks better on the 3 minute. This is our ISC, okay, which is our institutional sweep candle or impulsive sweep candle, however you want to look at it. What you'll find is that just above these liquidity areas, you'll have a ranging market like this. So that's our ranging market there. And when you see this ranging market happen, I'm going to mark on the range for you. When you see this ranging market happen, just before, can everyone see that clearly? Is that clear enough for everyone? I'll mark it on a different colour. Guys, feel free to put your microphones on.
So you might want to eat these first.
Everyone can see it, yeah? The orange zone I'm talking about? Yeah, okay. So this range here, you can see how it tricks in early buyers. We've got that push up, okay? A lot of people will be thinking, do you know what? We're going to go bullish here. They'll set a trade like this. They'll set a trade like that just below that low, and they'll hold to the trap and they get swept out. For me, I'm not interested in trading this marketplace until we've got this candle formation. And it's really, really simple. We are looking for no more than 3 candles. Okay, you might have a fourth sometimes, but I generally want 3. No more than 3 candles pushing below a liquidity area. That's our liquidity area. Price has come into this area, created a small range, false move, and that false move's been broken by the ISC. So the institutional candle, the ISC, however you want to call it, this now has signaled me into wanting to go long on this trade. So what I'm waiting for now, and we'll see if we get the setup, what I'm waiting for now is I'm waiting for a manipulation of one of these areas so that we can get into it. Okay, did we get the move? And do you know what? Probably wouldn't have got an entry on this. So you'd have had to take a risk entry here. What I'd be looking for me to enter this trade is once we've had our ISC, I'm looking for a manipulation setup for me to get in, which is then a push up, push down, push up, and then a sweep of liquidity for me to be signaled into a trade. We didn't quite get one on this one, sadly, so that would have been a no trade for me unless I'd taken a risk entry. It would be depending on how great I would have felt on that day. We might have held it like that, and you know, you would have got a nice kind of 4 hour out of it, out of the marketplace. You could have taken a risk entry. It's up to you how you want to trade. You know, risk entries are something that sometimes I'll take, sometimes I won't take. It really depends on the day, but ultimately you would have got a nice trade out of there, and you could have probably held it up to next liquidity as well and got yourself some decent profits out. Let's see. Now it looks like we pushed back down. So this could have been your manipulation setup. I don't really like it when it comes back in, but we have got a manipulation setup there. Push up, push down, push up, manipulation. If you wanted to take that trade, you could have engulfing pattern, stop below there. And let's see if it takes out the liquidity. That would have been 3R, so there definitely would have been a valid trade. And you would have got your profits out of there. So personally, I probably wouldn't have traded it if it had come back this far. They're not the cleanest of setups on this one, but you can see how it can be used, and it can be relatively safe to get into these trades, even on the risk entry. It depends on, you know, ultimately your appetite and your back testing and things like that. For me, I would have wanted the manipulation setup there before I would have got into the trade. That one, I'm not really sure what price was doing down there. It looks like it was testing some of this. Let's have a quick look. Yeah, we've got a little supply zone in there, as you can see. Okay, so we're going to be testing that. Now, one of the questions that we had, was it Christopher you asked the question about stops losses?
No, someone else.
Someone else.
That's me, mate.
Was it you, Sam? Sam, hi Sam. So yeah, so we spoke about stop losses and how to kind of place them. So the classic stop loss is I think a really important rule to have. And what I mean by the classic stop loss is making sure that your stop loss is in an area where the trade would ultimately be invalidated. So let's say you were just trading basic supply and demand, okay? You've had a push up here, a push down here. We've tested some more supply, or you could mark that on as the entire supply zone with the wick, okay? A lot of people try and get into really tight trades, and what they'll often do is they'll take 3 or 4 losses trying to catch something like this. Now that can work, and it can be a good trade. But like I said, you'll often take 2, 3, sometimes 4, 5 losses before you actually get into the trade that you really wanted. So I'm a little bit more conservative with my stops these days. If I was trading this as a risk entry and I got in after the engulfing like that, I wouldn't go for a tight stop. I'd take my stop like that. And then I have to really consider whether I've got the appetite to hold for maybe 3 liquidity points. Yeah, a 3rd liquidity point before I get the minimum I want out of a trade is 2R, because that way, at least if I get 2R, then I've got my stakes covered. I'll take 2 positions, and my stake is covered now at 2R. And in this example, you would have got it. You can go tighter with your stops, but a lot of the time you'll get stopped out. And I think until you're really confident in your strategy and you really understand the marketplace that you're trading, because every pair moves differently. Euro USD moves differently to Euro JPY, moves differently to Euro AUD. I'm often kind of cycling pairs in and out and trying out different things and different pairs depending on how I'm feeling. Sometimes I get bored of trading the pair, so I'll swap something else in. I took out GU a couple of weeks ago, and now I've put in EJ. So it's important, I think, to make sure that you are a little bit more conservative with stops. Now, this bullish price action, okay, tells me very clearly that if I'm going to be looking at this bullish area to be taking a long trade, for me, with a liquidity there, and we've now got this ISC candle there, for me, I'm not interested in trading if price comes back and blows that. If price comes down to blow that level there, I'm not interested in buying that again. Okay, what I'd need to buy that again is I would need another structural point for me to want to buy again. And once the area has gone down even further, because what would normally happen is this you can see is only wicked below, which means liquidity has fueled the bullish move. This is one of the important things to note about the ISC, is that the candle itself tells you so much about the marketplace. If the market doesn't, let me just make that a little bit bigger so you can see it. If the marketplace puts a load of candles below there, so let's say it was like that, okay, that to me isn't really a liquidity sweep for a day trade. Might be a liquidity sweep for a, you know, a swing trade, but for a day trade, it's not a liquidity sweep that I'm interested in. I want to be on the lower time frame, and I want to see price really clearly rejecting a liquidity area. So if price did come down and pushed past this, what it would probably do is it would push candles past this, not just wicks. If it wicked it again, I'd be okay with it. But if it wicked it again, it probably wouldn't take my stop out of my stop where it is. So the important thing with your stop, Sam, is to make sure that you are placing it in an area where your trade would ultimately be invalidated. What sort of issues do you have with your stops? Is it you get stopped out a few times before you catch the trade? Are you going too tight, or do you just have no idea where to put them when you're placing a trade?
Just too tight.
Just too tight. And what sort of pips would you normally get on a stop loss?
Between 5 and 10.
Between 5 and 10. Okay. And so are you finding that you're getting swept out and then the trade's going in your direction, or is it just failing altogether?
More often than not, just sweeping me out and then going. I mean,
So,
obviously sometimes it's completely wrong, but...
Is it? Okay. And when you're taking these trades, what sort of return are you looking at? So your first profit target, where are you coming out?
Around about 1 to 4.
1 to 4. Okay, okay. And would that be, so you'd be looking at something like that with a tight entry and a tight stop, trying to get your 1 to 4 out?
Yeah, exactly that, yeah.
So, and how many positions do you take at a time? Just the one, or do you
just
think
one.
just one?
Well, just
okay.
one at the moment.
I think if you're just taking one, and you're going 1 to 4, and then do you take full profit off at 1 to 4?
No, I take 50% out.
Takes 50% out. Okay, okay. So there's a couple of things that you can do. I think what will be really important for you to do is do some back testing, and even if it's not live market back testing, what I mean by that is not using the replay tool. Just go into the market, find your setups, and find 100 setups of your strategy. Okay. I think what's then is important to do is mark down your stop losses, mark down your profits, and how many times you get to your TP, and play around with it and see what you get. I personally would say to you this: if you're finding that you're getting stopped out, how much room do you leave below the wick of the candle that you enter on?
See, this is my biggest problem. I am maybe a pip or two.
Pip or two. Okay. Try and start by just doubling it. So for me, for example, that is too tight. It could work out, but there's always the chance that you could be whipped out of it. And you've got spreads to deal with as well. Do you trade with a prop firm, or do you trade with a broker?
Prop firm.
Prop firm. Which one?
Instant funded.
Instant funded. Okay, fine. I'm not sure. I'm not 100% on them. I'm not sure what their spreads are like. Personally, I'd say if you're trading less than 10 pips stop, okay, it might just be worth just adding a couple of pips. If you keep finding that you're getting whipped out by a couple of pips, I mean, there's a simple explanation, simple solution, isn't there? Just add a couple of pips to your trade. Going down to maybe 6 or 7 in this instance, yeah, look, it will, it'll cut out about 1/2 from your profits. But if that means that you get into the trade instead of getting swept out, then it could be worth considering. 4R, I would say, is quite a big target. For me, I'll usually take my first profits out at 2 or 3R. What you might be able to find is that if you play around with taking the exact same trade, but with a slightly wider stop and accepting 50% out at 2R, you might find that makes you more profitable. I think, we are so keen to get into tight trades and big R profits. When actually, I'm happy if I took 5 trades and all of them got to 2R and then went to break even. To me, that would be a 5% week. I'd be pretty happy with that ultimately. So, it's worth playing around with that. Definitely start by widening your stop. And if you're widening your stop, you're going to need to shorten your profit slightly. What's your break even rule? Where do you go to break even?
Normally after the most recent high or lows broke.
After the so for example, this trade here that you can see, once that's been swept, you'd be taking out your profits and then 50% off and then going to break even. Yeah, fine. So I think that's probably worth, I mean, it's quite a simple answer, I do appreciate, but I think it's probably worth just playing around with that in the meantime. You know, in this example, you would have got yourself out 2R there, okay? So let's say you were trading 1%, okay? You would have got out 0.5% here. You'd have then had 0.5% left on the market, and you'd have got out 4R there, so that would be another 0.5% if you wanted to close. Or let's say you did hold all the way up to the efficient zone. Might take a little while to get there, but I think we do. I think we took this out at some point. Can't remember. Come on. Let's jump up a time frame. Yeah, so you would have got out how I would have managed this. I can't remember whether I took this trade if I'm honest, but how I would have managed this is I would have taken out my first profits 50% off at 2R. That would have given me 0.5%. I would have then taken another 50% of what's left out of 4R, so I'm now up by 0.75%. Then I've got 0.25 left, which goes to 7R. Can anyone do the maths for me? It's quite late in the day. 0.25 times 7 is about, what is it? About 1.75. So you got out about 2% from that trade. I mean, look, I think a lot of traders are happy with 2% per week. So I definitely start mucking about with that, Dan. I think that would make a big difference. In terms of stop loss placement, there's no, for me, there's no kind of tricks to it really. I'm just looking to place the trade wherever I feel that the trade has been invalidated. And for me, as you can see, on a 30-minute time frame, it would be below that low. One of the good rules that you can use as well, one of the tricks that I know a lot of traders will use, is whatever the distance is from your entry to your wick. So in this example here, if that's the wick there, okay, let's measure that. So we've got 3.5 there until our entry. Just double it. So if we take that down to a 7, okay, then that's usually a pretty safe area. That's now twice the distance from your entry is where your exit point would be, and that should then account for spreads and wicks and things like that. Does that help?
Yeah, that's great. Thank you.
Yeah. I think it'd be worth, like I said, playing around with it. Try and get 100 trades marked out with how you're currently doing it, and just literally go into the charts, play around with them, and see what you find out. I think for you, what's really important, I think for a lot of traders who are new to this, back testing is so important. And I'm not talking about, sitting there and spending hours and hours on the charts, pressing play on the replay tool. I think it's really important just to get onto the charts and just mark out your trades, see where price would have come, see how you would have traded it, and then you can use the replay tool in the future when you're more confident with your strategy. Trading back testing can be quite daunting when you don't fully know what you're doing, and then you miss a trade and then you feel like you've cheated yourself because you marked it on anyway. Just spend some time marking your charts with trades. End of week markups are quite good as well. Go back through the last week, mark up any trades that you would have, should have, or could have taken, and see where you end up, and that will kind of dial your eyes in to getting into these trades. And we've got about 6 minutes left. I'm going to see if we can get another setup on here. Let's have a quick look, see what we did. So started making some moves below this zone, as you can see. It's the 15-minute chart. I think that was New York on, where was it, Tuesday. Look at the next day. So we're still ultimately on our higher time frame. We have tagged this zone, so we could be going bearish here. I would really like this area to be swept before we consider any bearish prices. Let's see if we get any setup. Okay, so we're back into this supply area now. Okay, what time of day are we at now? So this is coming into the Asian session. So I wouldn't be trading here. Ideally, we want to be looking at, I think we probably missed that move. Yeah, we missed that move now. So it doesn't look like there was much of a setup on this one. I can't remember what I took on last week. I don't think I definitely didn't take that one. Did I? Maybe, I'm not sure. I think I was in Euro JPY potentially. But you can see here from what we spoke about earlier in the session, you can see how this area now has been retested. And this is now where I'd be looking at more buys. We've now created a new range. Let's mark that one on. There was no setup there. That was a news event on the Wednesday. There was no setup there. Pretty sure I didn't take that one because I wouldn't have been in it from there. There was nothing in there. But now we are back in our back in our bullish area. We're in our discount area. We're into Asia. And let's see if we get a setup coming into the start of the day. So price is mucking about in there, as you can see. Okay, that's Frankfurt. Let's see if we can get a sweep out of Frankfurt. Okay. And now, let's see if we can get a setup out of here. Okay, so we're starting to push down. We've taken out some liquidity. I'd quite like Frankfurt to be taken. So that's Frankfurt taken. Push down further. Okay. So Frankfurt liquidity has been taken. Okay, now the Frankfurt zone, although it's kind of an inconsequential zone, people don't really understand how to use it. Frankfurt will normally create a weak low or a weak high. So it's a good one to be swept. And as you can see here, we've had another sweep of some more liquidity over here. We've got imbalances here that you can see. If I just drop down a time frame, you've got some imbalances here on this market that we've tagged into, and then we've got a supply zone there. So this is a really key area we want to be looking at. This itself has swept out more liquidity, and what we'll be looking at here is for an opportunity now to get into some sort of long position. So this is our sweep. If I jump to our 5-minute time frame, this formation here is our ISC. Okay, it's quite a big one, as you can see, but lovely wick rejection on there. So we're happy with that. And then now for me, I'm just looking for an excuse to go long. I want a sweeper there. Did we get one? It looks like this one might go without us as well. Okay, so that could be a trade there that we'd be interested in. So let's make this a little bit smaller so we can see it easier. We've now got a bullish here. So coming back to the stop loss question, okay, where would you place your stop loss in this trade? Let's trade it as if we were live in the marketplaces, okay? So for me, my first profit target is going to be off there. Now, does that get me what I need? It doesn't quite, okay? I need a 2R ultimately. So this is where you need to be kind of deciding what you want to do in terms of your own strategy. So the safe stop loss is below here, okay? But that's going to get you 1 hour out. The fact that price has now really bullishly pushed away like this, I'd be happy in this instance to place a tight trade on the basis that if I was going to be taking some profits out, I want to be taking out first profits there. Now, we've had a good rejection here. We didn't quite get our manipulation set up. Again, this would have been a risk entry. But what we can see here is that we've then had this congestion around kind of 2 o'clock. Whereas this is the 1 o'clock move. We've got this congestion here. So could we be looking at a trade that might actually take us into higher prices? Maybe. Could we be looking at something that sets us up to go bearish again? Possibly as well, because then we've got the New York trap down here that we want to be looking at. So to be honest, when I was looking at this, I thought this was actually London Open, but this is actually New York. So I didn't realize that we've actually got a trap there. So let's mark that trap on. And yeah, we get stopped out. So this is the risk of sometimes placing those tighter stops. And let's just see what happens from here. Yeah, so this kind of proves the point, doesn't it really, Sam? Is that had you gone tight on that stop because you wanted to get your profits out, you could have been swept out. And that's actually then a really nice manipulation setup for higher prices. That here, push up, push down, push up on the 5-minute time frame, that would have been a really clean manipulation setup. So this is where sometimes you will take a couple of entries getting into them, but that in itself there is a perfect entry of a manipulation. Sorry guys, Zoom only allows you to have allow participants, enable waiting room. Try to get everyone in. Admit. You switch off this. Let's try and switch off this. Enable waiting room. We don't want. Right. Okay. Cool. Right. Everyone in? Everyone hear me?
Yes, mate.
Yeah. Cool.
Yeah.
Perfect. So let's just come back to our. Let's get off that. 2 seconds. Right. Okay. So that's, like I said earlier, a good example of why if you place a stop loss too tight, you might end up, missing out on the trade. And actually on the higher time frame here, we had a really nice manipulation setup. Push up, push down, push up, manipulation, and a push up. So that was a really clean entry there. Okay, that's our manipulation setup that we're looking for. We're looking for a false move up that's manipulated. We can mark on our MSU there. Okay, and this has all come from that ISC. Okay, these candles here, you don't have to trade from them straight away like that. What you could be looking for is, your MSU setup to appear and then engulfing, and then, that would have got you a really nice entry here, engulfing pattern there, stop below that low, nice safe stop here. Okay, your first profit target would have been probably one of these liquidity highs. Yeah, so that liquidity high there.
Mate?
Yeah.
Can't see your screen.
Can you? Oh shit! Sorry guys. Right, 2 seconds. 2 seconds. 2 seconds. Where has it gone? We back in?
Yep.
Yeah, perfect. Okay, so let's just come back to what we were talking about. So we've got here, like I said, a trade that we took previously off that move, which, as we can see, if we placed a type stop, we would have been stopped out on. Okay, what was actually happening is price was creating a false move to be manipulated, and that is exactly why a tight stop can sometimes screw you over, because these areas are designed to be manipulated. Okay, the algo, it wants you to take these trades early. It wants you to take them with tight stops, so that when you ultimately get the full move, okay, you're not in it, or you've had to take a few different trades to get into it, and then you might get your 2R out, but you're still in a negative balance. It doesn't want you to catch these moves, so it manipulates the marketplace. And the manipulation, I think, in its simplest form, we always think that it's just a case of sweeping a low and then we're good to go, but it doesn't really work like that. You have these manipulation setups in these moves as well. And I think a lot of people get tricked out on these because they think, oh shit, do you know what's happened? We've taken out liquidity there, we've tagged the supply, and we're now going bearish. And me maybe a couple of years ago would have probably taken that trade. And I would have taken that trade and lost. So I would have taken the sell and lost, and wondered why I kept losing. And this is where lining up your time frames and your market analysis and your liquidity zones is really, really important, because look at what's happening here. We've got this push down, we've cleared out these levels, we've taken out new lows. This is a significant area. The reason why this is significant is because it's taken out a major level. So if this level is swept itself, that again is a significant move. And this is what will cause often ranging prices, because do you ever wonder why ranging prices are always at the top end of a higher time frame range or sat below the liquidity point? It's because every time it takes out one of these lows, that becomes a major level. So price hasn't got the weight to blow through it, so then it will reject once again, because everyone is expecting this to reject. So there's loads of orders sat there. The breakout traders are wanting this to push all the way down, so there's loads of orders sat there. So this is why you often get ranging markets just at at market extremes, either above price or below price, or at a daily level or a weekly level. Price often will stick around there. It's because every time it gets blown, it creates a new level, which is really high probability to trade from. coming back to this example, okay, we've had our manipulation set up. So that's our push up, push down, push up, push down. That's our manipulation there, okay? So what we're looking for now is we're looking for a engulfing pattern after this manipulation. Let's mark it on for you so you can see it clearly. So that's our MSU there, okay? What we're looking for is for an engulfing pattern for us to get into this trade. If you'd place your tight stop loss, Sam, okay, you would have ultimately been stopped out of there. If you place your trade safe, which is below this supply, then you would have taken out your first profits here, maybe, or your first profits at this liquidity area there. Next liquidity after this one, okay, so that wouldn't have quite got you 2R. Your next liquidity point is up there. So for me, I'd probably be going to break even here because it's not my 2R, so I'm not interested in taking profits out there. And then I'd be taking first profits at that liquidity area. And that, for me, I'd be pretty happy with. And let's see if we get it. I think I remember this now. I think it comes down and almost retests break even and then goes bullish. From what I remember from last week. Let me jump up the time frame, sorry guys. Yeah, I remember this one now. And look, that would have been a stop. So, you know, this is where, you know, your liquidity areas and your first targets are really important because, you know, in an ideal scenario, you would have taken out first profits there. Okay, first profits should have been there, but it's a 1.68, so, you know, what are you getting out of that? But if you had taken profit, you know, the one thing to think about is that if you had taken profit out of there, you know, that's something that ultimately, you know, you might have taken 1.68 or half of 1.68 or 80% of 1.68 instead of nothing at all. You know, a break even there would have been really, really important. And this is where if you got break even, it's not the end of the world because you can see with that news move, we got taken almost completely and fully out anyway. What's important to note is that this is all stemmed from the ISC candle. If you'd got a tighter entry on one of those, you might have ended up with your 2R, but the market was quite heavily bearish. If we look at what's happening up here, we've got, you see, do you ever wonder why price, you know, almost immediately rejects? Okay, in almost like random areas, you know, we have price coming into these zones and rejecting, and you sit there sometimes scratching your head thinking, well, what did that reject from? This is where efficient pricing is really important. So this is the entire supply, okay? The entire supply zone. So for this move here, let's move all of this out of the way. We don't need it anymore, okay? Let's get rid of that, get rid of that. I'm not interested in that, okay? So this is our new range. I'll clear some of these out. Okay, this is our new bearish range. This is the entire supply. It's not just this bit up here. It's great if price gets into that bit, but it doesn't have to, remember. This is our entire supply, and this, until price has tagged it, this is an inefficient area. So the reason why price will sometimes reverse almost completely randomly is because it's tagged into this area and it's created efficient pricing. We mark on from the low of the supply to the low of the most recent low that broke the supply. That is now efficient pricing. So if you're ever scratching your head and looking at the charts and thinking, do you know what, why is this gone? We're not in premium, or we haven't reached past equilibrium, or whatever it may be, this is a really, really important lesson to learn, is that when you're trading counter trend like this, as soon as that area is tagged, price can go bearish. It doesn't have to reach premium pricing. I wouldn't be trading that. I definitely wouldn't be trading that. But it doesn't have to reach premium pricing. In fact, what I did instead on Friday, I think it was. Is it Friday? Let me just see where my chart is. 2 seconds. Yeah, Friday. I think what I was in instead, because of the range that we were looking at, is I took Euro JPY. Okay. And this is why I quite like trading two pairs of the same denomination, so they're both euro pairs. For me, this was a much better trade, as you can see. Okay, if we look at this, was it this one? Yeah, I think it was. Yeah, we look at this chart here. Okay, we've got a nice push up into this area, okay, on Friday, and we've taken out liquidity to the left. All these liquidity points are taken out. We've then got a lovely rejection, okay, ISC candle there, Okay, same formation as you can see. We've got a little range beforehand. You can probably see it clearly on this. Where's it gone? Got a little range beforehand and then a push up, and again, even on the 1 minute time frame, we've got no more than 2 or 3 wicks above that. Okay, that's our ISC candle. You can, if you've tested it, you can enter just off the back of these if you really want to. Okay, let's use our strategy from earlier, Sam. 10 pip stop, so 20 pip safe. Okay, and then the news just down to Frankfurt would have taken you out. That's a weak low, okay, because it's a Frankfurt low, so we're expecting that to be blown, and you could have held it all the way down if you wanted to. So the ISC candle is really important to look at and look out for, and ultimately making sure that it is in the right place. Euro USD gave us the same move here, but we're not interested in taking that move because it's in the wrong place. It's not in an area that I'll be looking to take trades from. Euro JPY, however, was in a good area, and we could have taken that one, and it was a clean setup, as you can see. Liquidity taken out from there. Let's mark that on. Okay, into supply. Okay, so we've got liquidity there, into supply there, and a really clean trade. Do any of you guys find on TradingView when you're trying to click your buttons, it doesn't click? Like you try and click rectangle and it doesn't click. Do any of you get that? Or is it just me? It does it all the time. It's really frustrating. So that would have been a really clean trade, and Sam, using that strategy we used earlier with the stop loss, you can see that perfectly the stop, if we take double from where the entry is, the stop is perfectly above that liquidity high anyway, so that would be in a good stop placement. So that's pretty much everything I want to go through today. I want to hand it over to you guys now to see if you have any questions that you want me to answer whilst we're here. Probably got another kind of 10-15 minutes or so.
Yeah, I was thinking about the major lines.
Yeah.
What constitutes them?
So what I'm looking for is, let me just get rid of this stupid window again because I can't see my weekly button at the moment. 2 seconds, guys. How do you get rid of it? Oh, I hate these apps sometimes. Is that right? No, not that one. Not that one. How the hell do you get rid of that? I did it earlier as well. More. There we go, got it. Hide float. That. Okay, cool. So if I'm going up to, sorry, I couldn't see my weekly button. It was covered up by the Zoom panel. So for a major area, I'm looking for a higher time frame swing point. Now, there's no, for me, I don't use really any kind of technicality around my swing points. I just use common sense. We can all see where the swings are on that chart, right? Let me just zoom in onto it, okay? We can all see very clearly that we've got a swing point here. We've got a swing point there. That's blown. Okay, we've got a swing point there. Personally, I think swing points should be really clear and easy to understand. In any swing leg, it should be the highest wick. Some people say it has to have 2 candles above it either side, or 2 candles below it either side. I don't really get into that. For me, I just use common sense. If it looks like a swing point, then it probably is a swing point. So for a major level, I'm just looking for an area that is clearly a swing point on either the weekly time frame or the daily time frame. Your trading time frame is really, really important. I know a couple of people, Robbie in here, for example, trades typically higher time frames, so he might be looking at these slightly differently to me. But for me, all I'm caring about is kind of daily swings and weekly swings. That for me is where I'm getting my high value from. I'm then looking at my hourly time frame for my setups, and we go from there really. So ultimately, your swing points on the weekly time frame, those are your major levels. And again, I don't think there's any science around it. I just use what's common sense. That's clearly a swing up. That's clearly the high, so I'll mark that one on. That clear?
Oh, yes. Thank you.
Perfect. Start playing around with them and see what happens. It's good to kind of, go back in the chart. So if we want to look at what happened around this swing point, okay, we'll mark on that. Let's just delete everything else for now. Okay, let's get rid of all of that. And get rid of that. Okay, so we can see this clearer. So if we're looking at that swing point there, let's mark it on as a major level. Let's pretend that it is still live. We're going to go back to that candle there and get rid of it. Okay, daily time frame. Let's get up to there and see what happens. Okay, so daily time frame, we've taken that area. Okay, hourly time frame. Let's see if we get any setup. Now, we've broken this very, very impulsively. I would want to see some sort of hourly structure for me to get into that trade. And you can see it just doesn't give you anything. When you find that these areas are blown through like this, it's very unlikely that anything's going to happen, as in, you know, you're going to get a short from here. If you were to get a short, you would need it to come all the way back down below that level. For this level to be one that you want to be trading short from, it needs to have price back underneath it. If we just go back to the last one that we had, which I think did cause a reaction, as you can see there. Okay, let's mark that one on now, and let's see what happened when price came to it. And this is, again, this is, you know, this what we're doing right now. This is back testing at the end of the day. This is a really good way for you to kind of test out your strategy and see what happens at these major levels. You know, just getting your eyes dialed into what's happening at these areas is really, really important. Okay, so let's see what we got here. So price has come up and it's taken out that major level. Okay, now for me to want to trade it, I want price to come back underneath it. Okay, which we have done here. We are now in London, as you can see here. That's our London area. And we've got here, even on, you know, the 30-minute time frame, that would be my ISC candle. Okay, that formation there, okay, that formation there for me, that is my impulsive or institutional candle, however you want to look at it. It's taken out lots of liquidity to the left. It's a key area we want to be looking at sells from. So for me, you probably won't get it on this trade. I'll be looking at, you know, an option to go bearish on that. Let's see if we get anything in New York. Okay, I'm doing this quite quickly just because I'm conscious of time. Okay, so we've now on the hourly time frame taken out this liquidity point here. Okay, and on the lower time frame we've got more liquidity sweeping there. Haven't quite got my ISC candle that I'm looking for. Maybe that one. Oh, we haven't got that data point. 2 seconds. Lost my charts now. 2 seconds, guys. Let's get back to it. Right, let's go back. Replay from, where was it? Down here, wasn't it? Down here. Okay, so we haven't quite got our liquidity point there. And, you know, as you can see, as market's gone on, you know, we want these candle formations to be really, really clear. Like, that's really clearly an ISC there. It's taken that liquidity, it's immediately rejected. This one, however, there's not really any wick rejection. And as you can see, it creates some weak move back up to there, but ultimately pushes back down. Okay, we're coming then into the next day. Okay, let's see what we get in London. So London has taken out Frankfurt. Anything on the lower time frame? Do you know that could be a trade that we could be looking at? It's not the clearest. Did we get ISC? Oh shit, I've done it again. Fuck's sake. Sorry guys, 2 seconds. That's the trouble with TradingView. Even if you pay for their pro, you still only get a certain amount of data sets. Alright, let's go back to here. Where were we? So, yeah, you might have got a trade out in New York there. New York trap is there. So London's pushed down. Yeah, again, it's not really giving you anything clear. But this one, however, this is a clear move down. There's not really any entries on here, really. Unless you just trade a kind of basic break and retest. That's not something I will typically trade. What's happened here? So we've taken out more liquidity down there. That looks like it would have been a good trade. So that's now another level that we've taken out. Okay, see what we got on the hourly time frame. We've got a good rejection from there. Okay, nice rejection from here. Push up, push down, ISC there. Okay, that candle there with the wicks, as you can see. Haven't taken out Frankfurt, which shows how strong Frankfurt could be. So that's another reason to go bullish. And then what we're looking for. Can I get 3 minutes? Oh, for fuck's sake. Stupid fucking thing. I'm going to be to down there, didn't we? Right, I'm stick on the 5-minute chart, guys. I won't be able to go any lower, I'm afraid. Oh, I nearly did it again. So we've got ISC candle there. Let's see if we get a manipulation. And no, we don't. We just get pushing up and up and up. We take out the trap. See what happens. Range in market. Okay, and there's our ISC. So here's in our trap. We didn't blow the trap this time. The trap's hold, but price is heavily bearish. But this is where the weight of these major levels will really come into play. As you can see, prices, you know, taking us really heavily bearish because of this area. That trap itself wasn't blown. It created an ISC, as you can see on the 5-minute time frame there. If we get a manipulation setup from here, yeah, so that's your manipulation setup there. You've been clear on the 1-minute time frame. Engulfing would be there. Hold down to first liquidity point down here. Okay, which is that. We could go to that Frankfurt low. And you've been stopped out there, but you've got another manipulation set up here. Another engulfing, which could turn out to be a losing day, which happens sometimes. Stop above that high there. See if we get it this time. Stop, stop. And it looks like we're going bullish. So that would have been a losing day. A couple of trades out of there. Not really markets that I like trading. I like to have my sweeps of Asia. I like to have my sweeps and then my manipulation setup. So I'm just kind of marking trades on so you guys can see really. We might come in to test that. Let's see if we get another one here. We're coming to the end of the day now anyway. No, this is getting quite mucky, this chart now anyway. And if you look at the entire range as well, we were selling then. That would be the mistake. We were selling then in the wrong area as well. So these aren't great trading opportunities. See if we can get into higher pricing. See if we can get something out of there. Whilst I'm playing around with this, does anyone have any questions?
Yeah, can you hear me?
Yeah.
Is there any rules on when you would wait for the manipulation, or you would just trade straight off the ISC candle and engulf in afterwards?
So when you say when, do you mean time of day?
No. So some instances you see the ISC candle and then you wait for a manipulation first before you get in, but then other times you see the ISU and then it drops or goes up straight after. Is there any like rules on when you wouldn't wait for the manipulation after?
Not really. I mean, it's difficult to say. I think this is where just understanding a price action can be really, really important. You can get into, you can get into trades just off the sweeps if you want. I mean, the ISC candle really is just a slightly more advanced version of a liquidity sweep. It's just to give you a bit of structure around what a liquidity sweep is and what a liquidity sweep is doing. We want, we want the ISC basically to show us clearly that there is manipulation in the marketplace, but it's just a form of liquidity sweep. So it's really up to you. I mean, if you were just trading, say, the minutes time frame, you could trade just off the ISC itself. You've got no issue with that whatsoever. If you were trading on, the hourly time frame, you could do the same. I quite like waiting for confirmation, which is why sometimes I will miss a trade because, I've waited for, a manipulation setup or something like that. But yeah, if the market is really impulsive, as in, we're pushing up. So here, for example, okay, there, we're pushing up, slight little pullback. That would have been an ISC. That probably wouldn't have given you any kind of setup to trade from. So in that instance, if you're in the middle of a really bullish leg, as you can see that we are there, okay, there was no kind of a manipulation setup there. There was no real way to get into this. There's not that I like anyway. I like a really clear manipulation setup before I want to get in. But you could have, because of the time of day, I think if you're going to be trading just off the back of an ISC, if it's clearly taken out things like Frankfurt and Asia low, there's no harm in trading that like that. Stop below the next liquidity point. Your 2 R's easily out there, as you can see. and then, you know, your major level was there, so you would have probably taken most of your profits off there. So there's absolutely no harm in that if you're really confident on where price is heading. And, you know, this is really bullish, corrective price overnight. Then we've had an ISC there, and then another real big bullish leg. So if price is really impulsive like this, then you can enter as a risk, because the likelihood of coming back to give you the MSU is probably a lot lower. Does that help?
Yeah.
Yeah. Right, let's just play this out a little bit more. Let's see if we can get another setup. So we've come into an area that we'll be ultimately looking for sells from now. Let's see what we get from here. So this is Asia. Okay. Asia starts pushing down right in the morning. Okay, so we've taken out Frankfurt. Sometimes the price will do this. Let's see if we get a manipulation set up. And then now we're looking for an engulfing. Okay. Okay, so that for me, I'm pretty happy with that. So safe stop would have been above the high. First profit target. Well, there's a few little liquidity points there, as you can see. I want to be taking 2R out of this trade, so I'll probably use the low of, what's that? That is Monday's. That is Monday's trap. Now, traps the next day, they're never as effective as the same day. They're much better when they're swept on the same day, but they can still take price below them. They're still trap levels, ultimately, in my eyes. So I'm going to be looking at trading this. Okay, that's our manipulation setup. If you were really hungry, that's another manipulation setup there. Okay, so you can see a couple of things have played out here quite well. Now, if you were really hungry for profits, you could have taken this off the back of a really tight stop, 10 pip stop, something like that. Using what we spoke to Sam about earlier, we're going to place a safe stop, and that's going to be above where the trade would fail. We've taken our 2R out here clearly, and what else did we have here? We've also had another New York trap taken out. So that's everything falling really nicely into place, as you can see. Okay, that would be our New York trap. Sometimes the trap itself will be slightly outside of New York, okay, but you've just got to use your common sense, okay. The push up that New York has created, that has come from there. That therefore is our trap. So what happens a lot of the time in here is people assume, because of what's just happened on the marketplace, is liquidity's been taken, big impulsive move up, that must mean that the market is going bullish. But we know from our higher time frame analysis that we're in premium pricing, therefore we are only looking for sells. We've also killed off a major level, which means sells are much more likely. That's a dead major level now, so we mark it red, which means sells are much more likely. So for us, we're going to look at this. Oh shit, I've done it again. I hope you lot are finding this funny. I'll tell you, it's irritating me. Right, let's go back to where we were. Where was that trade? Right.
While you get that back, can you in the Discord put in those indicators for the New York and Asia, because they're quite useful.
Someone help me out. Did I do a video on that recently? I think I did, didn't I?
Oh, I haven't caught up on your videos. It could be on there.
I think I did. Has anyone seen it? Did anyone remember which one it is? I probably should know this myself.
Oh, somebody in the chat said, yeah, there is.
Yeah, there is. There's a video. I think one of the most recent videos that I did has got the settings in for it. If you can't find it, pop me a message and I'll dig it out for you, okay?
Cool. All right, thanks.
So yeah, so coming back to our point, we're assuming bearish. We've taken out a major level. We come into premium on the left-hand side. I'm not going to go back again in case we lose our chart. So we're expecting bearish prices. We can see that Asia has created a liquidity high. It's been pushing down quite nicely. We have swept out Frankfurt. We've created an ISC candle there, which you don't quite come back to test. But that is enough for us to say, do you know what? We've got good bearish pressure in this marketplace. We've now waited for a manipulation, which we got here. That would be our manipulation, okay? And once we've had the manipulation, 2 seconds, mark that on. Once we've had the manipulation, okay, that's been done. We're then just waiting for a engulfing pattern, which you probably see clear on the 15-minute there. You can see it there. You could place a nice tight stop if you wanted to here, or you could double your, get out of my way. You could double your, so that's a 7. 6, 7, sorry. So yeah, 7 there. Let's go to a 14 pip stop. I would have probably just done over that high just to be on the safe side, but that would have got you 2 to 3R out of the marketplace off our first target, which would be in our trap. Now, if we zoom out a little bit more, second targets would have been that low. Okay, we know that we're expecting bearish prices. So for us, taking that low is really easy, 4.9. And then if we get rid of that altogether, let's jump up to our daily time frame. My next target on this marketplace is going to be the next daily level, which is right there. Okay, we haven't got any kind of key liquidity areas, so we're going to mark on that daily level. Let's see if we get it to it. So if we'd held that all the way down to there, we would have got 6R out of it. Do we get it? Asia, now we would have got stopped out. But you know what? That's a good day all round. We've come out of the marketplace with 2R and then 4.9, so 2.5, so 2 half that, so about 2.25 out of the marketplace. That's a really good day. That's a really, really good day. 2.25R, so at 0.5%, that's, you know, 1% out of the marketplace, or if you're trading at 1% per trade, you know, that's 2.2% out of the market. We can't really complain at that. That's a really, really good day. And there's probably going to be some sort of buy setup in there as well, potentially. But, you know, for me, I'm not looking at buys here. I'm just considering sells. We'll probably get another sell. Yeah, so that, look at that massive ISC there. That's a really clear institutional move, as you can see. We've got setups galore probably coming on here. Asia. Let's see what we get throughout Asia. This will probably be my last trade of the session, guys. So anyone have any other questions? Oh, I've done it again. That's it, I'm done. Not the stupid trading view. 2 seconds. Where are you all?
Oh yeah, I was wondering how many pairs do you usually trade? Is it 3 pairs? Or?
Yeah, it interchanges really. I'm not really too fussed on how many, but never more than 3. For me, I'm looking at kind of 2, 3. Euro USD is my main pair. That's the one thing that's just worth noting, is that Euro USD is the main pair that I trade, and will always be the main pair that I trade because I trade the DXY effectively. The DXY is pure dollar price. Okay, it's a basket of all different dollar pairs. So for me, the DXY is it forms a foundation for all of my trades really, because it drives the marketplace. So I'm looking at the DXY first and see what that's doing. If the DXY is showing me bearish, then I'm looking at Euro USD for bullish. I'll use the Euro JPY and Euro AUD as kind of backups for if there isn't anything, or if the market isn't good. I'll be honest, I like to be trading. You know, those of you who've been on my Discord for a while, you know I like to be trading, and I often fall foul to over trading. But for me, if I can't find something nice on Euro USD, I'll usually find something on Euro JPY or Euro AUD, or before I was using GBP USD. So I kind of interchange it, but yeah, I would say really I trade 1 pair, and I have a couple of kind of spares in reserve.
How many trades a week do you think you do?
Probably too many. I'm probably taking a couple in the morning and a couple in the afternoon. A lot of people would probably tell you that you should only really be looking at 1 in the morning, 1 in the afternoon. I used to take kind of 4 or 5 in the morning. I'd happy to take 4 or 5 in the morning, but I was massively over trading then. So yeah, so nowadays a good day for me, I'll normally take 1 in the morning, 1 in the afternoon. I don't mind taking a couple in the morning, a couple in the afternoon, but I'll try and stay away from trading any more than that.
Okay.
Okay. Any other questions, guys? No?
No.
Okay, cool. Well, look, I'll get this all recorded and uploaded to YouTube, so it's there for any of the members that have missed it, if you want to look this back. And as always, if you have any questions, guys, just pop me a message in Discord. Thank you so much for everyone that turned up. Really, really appreciate it. Oh, I've just seen the chat. I couldn't see those. Yeah, really, really appreciate it. And yeah, hopefully catch you soon. If you need anything, any questions, this is what I'm here for, guys. Just pop me a message. I'm always happy to help. I've got my Monday analysis should be ready to go, I think tomorrow. So I'll have a weekly Forex analysis out for you, forecast. And if you need anything, just pop me a message. Cheers, guys. Cheers, cheers, cheers. Bye-bye.